morning, everyone. It's Gail with Traders Help Desk, and I just wanted to take a moment to walk through not only the new ATR support and resistance indicator, but also the other indicators and how they help you to trade. So let's start with the new indicator first. Now, some people are not quite sure what this indicator does. So you see right here, you have a red plus sign and a red congestion dot. This actually corresponds to this ATR on the 240-minute chart. It's also showing you that right now you have a congestion dot just about here, okay? So you have two areas that may support price. One is the ATR and one is the congestion dot. The distance between these is about 20 pips. So that's one thing it shows. Okay, the blue ATR and the blue congestion dot correspond to the 60-minute. So you can see this is the ATR on the 60-minute, but you also have a congestion dot that is above price, because both of these are based on the ATR. Then we have the white, which represents the congestion dot and the ATR from the 15-minute. So the white plus sign equals the ATR on the 15-minute chart. The white dot equals the congestion dot on the 15-minute chart. So what we're doing is looking at these three support and resistance indicators on one time frame. That's all you're doing. Now, if you have been through my training, then you know anytime we get this magenta peak right here, we have a trade set up that you can go into this retracement back to the ATR. This is what the ADX peak tells us. We're going to get a retracement back to the ATR. This is on a 240-minute chart. We have a trade set up that if the 15-minute flips the ATR, goes back and tests the ATR, and the ATR acts as resistance, then we can take a trade. Now, let's look at this with the new ATR support and resistance. Here, we are split, okay? We have a blue ATR, which is the 60-minute, and we have the 15-minute that is below price. Now, this you could have caught by watching the charts, but it's much easier to watch it over here. The entry point for that trade was anywhere this went back to the ATR. Okay, so we have both ATRs in our favor now, and it goes back to test it. Okay, and when it does, you have diverging volume, which you can look over here and see. So that would have been in the entry into this retracement back to the ATR. Now, you would have had several entries more than likely, but this was your best entry because now you have not one but two time frames in your favor. Okay? You can also see that you're still about 5 pips away from this ATR. So an entry now would not be advisable because there is only 5 ticks to this ATR. You also have hidden divergence forming on the 240-minute chart, which identifies price going up. Now, I don't always have the ADX on my chart. Very seldom do you see it on my chart. And the reason is because I monitor it in the scanner. For example, right now, the Euro Yen has an ADX value of 78. That is considered to be overextended. The Euro Dollar has an ADX value of 71 on the 240-minute chart. So that tells me we're probably going to get retracements on these markets. You can also see that you have a dark blue here. You have a dark blue here. That tells me more than likely we have had a magenta peak on these two time frames. Now, we still have the ATR below price. And I know that because these cells right here are blue. Again, a lot of information to process, but if we switch over and let's click on, for example, the Euro Yen, okay, you can see it's right at the ATR on the 15-minute chart. Now, very likely you're going to get a magenta peak on the 240-minute chart. Why? Because you are overextended on the stochastics. Now, let me put the ADX on the 15-minute and you'll see what I'm talking about as well. Okay, now you can see this is the magenta dot over on the 15-minute chart. This is a flat ADX. We do not trade when we see that magenta dot in its flat. But more than likely, tonight, which is Sunday, you're going to get that magenta peak, which is going to push you down to the ATR over here. What's going to happen first? The first thing that's going to happen is it's going to flip this ATR, and if it does not close below the low of the congestion dot, then you're going to have an ATR up here and a congestion dot down here. What will happen typically is that price will come down to the congestion dot and then it will go back up and test this ATR. It is on that test that you could potentially take a trade, okay? That's one setup, okay? And that is on the Euro Yen. Let's go and look at the Euro Dollar. Now, the difference with the Euro Dollar is that if this price comes down to about here, you're going to have a magenta peak here. So this is where I would start looking at the 15-minute for an entry. Again, it has to flip these ATRs, and then it has to test for resistance. So again, you're going to have this little move like this, and then it's going to come down. It is at this point that I'm looking to take an entry. Again, you're probably going to get a magenta peak here, which will then roll into the 240-minute chart. Again, just a different way to see the markets on that. Now, using the scanner, you know everything that is at an ATR. All of my entries are at an ATR going into the higher time frame. So if we click on the Aussie dollar, you can see this was your entry here. It was highlighted here first, okay? On the Euro US dollar, you are at an ATR. Do you want to take this trade to the long side? Even though these are all aligned, you should not take it only because you are overextended here and you're going to make a magenta peak here. In this case, I'm going to say no, I'm not taking this trade. This trade was okay to take, this one was not. And again, this is going to highlight every market that is at an ATR. So you know exactly which markets you need to look at and when you need to look at them. Okay, let's look at the British pound dollar. Again, you can see it came to the congestion dot, went back and tested the ATR, came back down to the congestion dot, and now it's going back up. Now, this could have been an entry into the next upward movement. Why? First, you have the white congestion dot that is supporting price. You also have the blue ATR supporting price. Are we overextended on any of these time frames? No, we are not. You can actually go down here. You can see that the ADX is dark red at 29. That tells me that we're not overextended. If we come down to the 240, you see that we are bright blue, and that just tells me that the momentum is to the upside. So more likely than not, this market is going to go up. You can also see, if you read volume divergence, there's seller divergence right here telling me that as price made lower lows, then the directional volume showed that sellers decreased. You can also see that up here as well. You were making new lows, but sellers just did not step in sufficiently to take price down. And the buying volume is starting to increase on the highs. Again, these are excellent clues that more than likely price is actually going to go up, not down. You could also see hidden divergence over on this time frame with the multiple ATR support and resistance, because you're making higher lows, but you're making lower lows on the stochastics. Again, an excellent example of hidden divergence right at an area of support and resistance. Let's go and look at another market. For example, the USD Swiss Franc. Okay, you are overextended on the ADX, and you can see you're not moving anywhere on the stochastics here. Now, do you have a trade setup? No. You have a white ATR, blue ATR, the congestion dot, and the red ATR. Now, you can see that looking over here as well. Here's your issue. You're starting to form a reversal pattern here. In other words, if you're looking at this, this is pretty much a congestion area, okay? I expect this to come just a little bit lower before it starts up. But with this ADX at 75, we know this reversal will come in. Is it set up yet? No. It has to form an area that is going to support a price move to the upside. That means it will flip this ATR, and instead of being above price, it would be below price, okay? Now, when that occurs, and then you want this one to flip, so now you'll have a white and a blue ATR, and it comes back and it forms support at the white ATR. That's where I would be looking for an entry, but not before then. Let's go and look at another market. For example, the US CAD. Okay, now you have the US CAD, and you can see that the US CAD, the stochastics is coming down to the prior level. The prior level on that stochastics was just about here. So you need this low to either exceed this line, or you're going to have hidden divergence. Okay, now that you understand what these ATRs and congestion dots are and where they're from, now we can go and actually look at entries. Okay, right here you have the 240 and the 60-minute above price. So, and I'm looking at the plus signs, okay? These are above price, and then the white ATR flips below price. This is what I'm talking about for the ATRs splitting. One is above, one is below. I do not trade when this happens. I just totally ignore it. Now, you see here, both the white and the blue are below price. In other words, your time frames are aligning together. But it always has to be a test for support in this case because it's below. It needs an area that will support price. What happens? Price moves up and then it retraces back to the ATR. That is exactly what we want to see happen. Now, you can also see that you're making higher lows, lower lows in the stochastics. This is the preferred setup. Why? Because you have all the ATRs aligned in your favor. They're both, well, not all, but both. The white and the blue is below price. The red ATR is up here, okay? So you have sufficient room to take a profit, okay? And you have hidden divergence. You have an entry here, then you have another entry over here. Again, same scenario. You have room to this ATR. Both the white and the blue are in your favor. Then what happens? The ATR split again. And when they split, you do not take a trade. This is telling you your time frames are not aligned. Do not trade it. Now, over here, they both come back together. So you could take an entry with the blue and the white because they are now aligned again. What happens after that? The blue and the white align to the downside. So you come back, you test for resistance because it's going down. You test for resistance here, and it comes down to the red ATR. Now, the red ATR does pull up. This is the beauty of the average true range. It moves with price. So it does pull upwards, but still there is enough room there for profits. Now, the one area that I would not have taken a trade, and it's simply because it's so narrow, is actually when it tested the ATR here. It does indicate that it would go down, but this is about 10 pips here. I would have preferred this entry over here because there's more room from here to here for profits. And again, you see that as prices making lower highs, the stochastics is indicating higher highs. This is the very essence of hidden divergence. Then when we go forward again, you see that you have multiple entries at this white ATR, but then what happens? They split. And again, when they split, you do not take a trade because you're not trading with your higher time frame. It's in confusion is a good word to say because the markets do not know what they're going to do. So these, yes, you can take. These you do not take because the market does not know what it is going to do.